Welcome. I'm Chuck DiVencenzo, President and CEO of NAFA. And I want to thank you for joining me in a conversation with Laird Rixford of Hexure, formerly Insurance Technologies. Hexure has been a long-standing member of NAFA, providing insight to our membership on the ever-changing and advancing insurance technology world. Before we take a deep dive into our conversation today, let me share a bit about Laird's background. Laird is the Chief Executive Officer for Hexure, where he leads the company's strategic growth, operational, marketing, and technology vision. With over 25 years of building and leading companies in the financial services and technology side, Laird provides the Hexure leadership team with a wealth of insurtech experience and guidance to achieve transformational growth and product innovation. Before joining Hexure, Laird served as the CEO of Texas-based Insurance Technologies Corporation, and prior to ITC, Laird founded and served as CEO of Evolution Designs, which ITC acquired in 2008. And outside of the passion for technology, Laird is an avid pilot, one which I'm very envious of. And I think because I've taken a couple lessons, but I haven't had the, the fortitude to continue it. But at some point in time, I'm going to do that, Laird. So really appreciate you having me. I love it. So appreciate that.
I appreciate the invite. I'm looking forward to the conversation. It's fantastic to be here today.
Yeah, and one of the things that was really interesting that I kind of saw in the background that Laird has, and we were kind of discussing this through the process, is that you've always been involved in technology and trying to understand, how Hexure fits their business model with NAFA members in the industry, and obviously throughout your career, technology has been at the forefront of basically taking our industry into the 21st century and really making it more efficient. So what does the future of distribution look like for you, and how does the consumer play a part in this relationship?
That's a fantastic question. I would love to rewind a little bit about my financial industry background. Is I started with banks, and the banking world was tellers and bringing checks in and all that. Well, it completely transformed over using technology. The Check 21 Act, where you could take a picture of a check with your phone and you could transact all of your banking without even going to, what are these things called now? Tellers? I don't even know what those are. And it was very powerful to see an entire industry transformed by insurance. And then with my time at ITC, it was the P&C industry. It went from the first quote being done online in 1999 to today that the majority of buyers never even talk to an agent. They just buy direct or they go directly to carrier. So technology helped drive that transformation. Now bring it around to this industry. This industry is the intersect of fintech and insurtech. It's wealth tech. It's the dead center of it. And frankly, wealth tech was one of the first adopters of technology. This was back in the 1960s and 70s on mainframes. Dating ourselves on this is that I remember punch cards. And so right. These are massive investments that were made long ago in the wealth tech industry. However, they were expensive investments. And those investments have carried on through time. And unfortunately, in a lot of ways, the wealth tech industry, when it comes to life and annuities and those types of wealth preservation products, has been forgotten. And that was one of the things I saw, is that this industry is ready, and it is already in the throes of embracing technology. Because those next steps of technology, which include consumers directly interacting with the products of how they want to buy, when, where, and how they want to buy those products, is ever more becoming something that this industry is going to have to handle. And unlike the P&C industry, it was this evolution. It was this slow evolution as it grew and it changed. You went from just now doing quotes to sometimes claims. So, and then all of a sudden now everything is there. This industry is ready for a revolution. You're going to see revolutionary leaps in the technology as the demands of the modern consumer really start to influence how distribution and brokers sell these products.
Yeah, it's interesting because to your point, back in 1990, I mean, the buzzword that started back then, disintermediation, and it really, in our industry, it's been a glacial pace in a sense. And to your point, PNC it's fascinating. And coming from that probably was a big advantage for you to kind of see how that would play out. So really, really interesting. Now,
Yeah,
go ahead.
you bring up disintermediation, and that was the buzzword. I remember McKinsey coming in and saying agents are dead and all of that. Not true. The reality is agents are the people who sell. If anything outside of just a basic, I'm insuring my Corolla, that's a customer relationship. Customers buy hamburgers. It's transactional. Consumers and clients, they have a relationship. And that's the one thing that this industry, I don't think is ever going to lose, is the relationship part of it. However, the consumers are going to be demanding more from their brokers and distribution.
Yeah, and to that point, like as we talked about, annuities are sold, not necessarily bought, because I think probably because of all the different intricacies of it and what have you. What can the industry do to further enable distribution to get products to consumers quickly and efficiently?
Well, the first one is absolutely on a carrier side. Remember, distribution and brokers, they don't sell, they sell the products. They're not selling their own creation. They're selling someone else's creation. And carriers first need to embrace that quick iteration, the speed to market, to bring products that are absolutely in need now and bring them forward faster. So that's the first part, is that we need to really enable the carriers to bring new products quickly to market. That sets up the next step, which is frankly, consumers are asking for more information. They're used to every bit of information right here on their cell phone, instantly there, and they can deep dive and they can understand it. They can read it at night, whatever it may be. But consumers are going to be demanding more of that information. And so brokers can assist themselves in selling these quicker by providing more information, better visualizations. You talk about illustrations of annuities, it's table after table of text, and people go, what is this for? It's you just printed off a ream of paper for no reason. But if you visualize it, it becomes a much clearer picture for the consumer. It allows them to understand it very cleanly. Doesn't mean illustrations are going to go away. It just means that we can present them in alternative ways to have the consumer understand and be along with the journey of the distribution.
And to that point, what are some of your carrier clients doing better to support those, the intermediary, the distribution partner that you're utilizing?
Really, the biggest thing is moving away. It's hard for me to say this, Chuck, is moving away from paper. That's one of the big items that we're seeing, is that this industry still has a good chunk of it operating on paper. You get a NIGO and then it just becomes a fully paper process at that point. But having systems that are able to enable straight through processing, where it really validates the data, so that instead of taking time asking all those questions and figuring things out, you're actually taking the time to sell. And that's what I really, that's where I come from, is that I would rather be enabling people the ability to sell more by making their process more efficient.
Yeah, and I think that's the whole key. I mean, doing, and doing what you're supposed to be doing, spending the time on the points that you're doing. And I think it's clear last year was kind of interesting too. And you got the data on you're probably seeing this from some of your partners, the significant increase, like for instance, in fixed rate deferred or MIGAs, and like 111% increase last year. It's like, obviously it's an interest rate situation, and that's why people are utilizing, but it creates all these administrative burdens and systems burden that you kind of work with that process. So what type of, as we see this stuff, what type of revolutionary change do you see in terms of our industry going through, and then how you help people work through that?
The first one really goes back to the enablement of moving away from paper. Is as I see the industry, that revolutionary step is going to go from paper scanning and faxing to tapping your watch on your phone to say, here's all my information. Yes, I want to use Apple Pay to pay for this, or I want to transfer my money using Zelle or some type of app. These are all things that the industry can do on top of it, but you have to have that underlayment in the first place. You have to have electronic straight-through processing that everything can be handled quickly. We're working with a lot of carriers to enable a very quick issuance process where we're able to provide all the information quickly and have that annuity actually transacted upon very quickly, because consumers are looking for something to do now. And so as part of that process, we are enabling through electronic means the ability for distribution to submit apps electronically, also to deliver documents both to and from the carrier to make sure that everybody has all the documents online. And ultimately, even things as simple as e-signature is having the ability for people just to do an e-sign request. If I can pay my taxes to the IRS with an e-sign, I should be able to buy an annuity with it, right? If I can go buy an I-bond on USTreasury.gov and just electronically sign it, then why can't we do that with annuities? So a lot of this comes down to understanding the compliance aspects and how, while technology does introduce new compliance concerns, like e-signature, was it really the person signing it? It also enables them to have that history of who, when, where, why, so that they can do an electronic signature. And ultimately, and this is the goal of InsurTech, this was the goal of FinTech, and it's the goal of wealth tech, is to remove friction from the buying process. And friction is time. Everybody knows that time kills most deals. So it really drives down to lowering the time that we are transacting a annuity.
How are you to that point? How are you working with the IMO side to go along that journey so that they can maximize their time and get where we need to be, I guess?
You know, one of the things that was very interesting as I looked at our platform is we're really working with our platform of Firelight, but this is not specific to our platform of Firelight. Is a lot of times we're an industry that tries to make round pegs fit in square holes or vice versa. And we found out that the distribution experience is completely different than a carrier's workflow experience. So one of the things we're doing is when we're working with IMOs and BJs of bringing in their brokers to actually transact using a platform such as Firelight, we are realizing that their workflows are completely different than the carrier workflows. So joining those workflows together in the sense of making sure that they map between this workflow and that workflow so that you can truly have, which would be SIMC or single entry, multiple experience type of work, so that you can really, again, go back to spend more time selling and less time typing and submitting.
Yeah, and I think to that point too. So we went IMO, like you also, and I think you probably did this on the P&C side too, is understand that end consumer too. Like, so how does that kind of relate as you're understanding this dynamic and as you work toward this, understanding that final consumer, then helping them through the IMO and then ultimately the carrier?
It's a full process, Chuck. It's an education process, not only to the carrier, to the IMO, to the broker themselves, and the consumer, is having that information and those educational resources available and quick to their hands. A good example would be instead of an illustration, you have a visualization where you have a nice little graph, but that graph isn't where it stops. There's educational content that is tied to that so that the consumer is hearing the voice of the experts. And again, this is why I say that you're never going to disintermediate this type of market, because of the expertise that is required, not only for just being a good fiduciary duty, but also financially, as well as, regulatory reasons. You have to have that voice in there. So if you can bring that voice down from the carrier through the IMO and down to the broker and bring it all together in everybody's collective for that consumer, the consumer is now part of that journey.
Yeah, and I think that what's interesting is, we hear again, another buzzword is the holistic approach in terms of product and changes, and I think having that systemic look at this, I think, is very, very helpful. So how are you working with folks to so that experience people want to have? Is that something that's interesting in terms of that process?
It's actually a fantastically interesting process. I love going and meeting our customers and just sitting like a fly in the wall and watching the process of how they interact. And you ask a question, why did you do that? And a lot of times the answer is, well, by law, I have to ask that question. It's kind of unique to come in. And it's not that I'm not aware of those reasons. It's more of always ask why. Uh, Even with the federal government, we've had a lot of time, a lot of situations where we have asked questions as an industry and been able to influence and change the way we look at things federally and whatnot. So having those conversations and looking at what we're doing and asking why and looking at it not just from a regulatory standpoint, but workflow. Why did you click that button? Why are you putting it together? Why are you marketing this way? Why is it fire and forget? I don't like fire and forget. I like to keep touching the client going, hey, did you get my thing? What did you think? Do you have questions? All of that. I found that over the broad scope of it, when you get outside of the paper process, Chuck, generally, it's a very well-defined process for the broker, but they're not bringing the consumer into the conversation on a regular basis. And we can pull from our own experience. I grew up wanting an agent and a broker, and I asked my financial advisor, hey, what do you think about this? Now people are just on Robinhood and making their decisions blindly. And there has to be a middle ground. And what makes a financial advisor stand apart from an app on the phone is the ability to say, that's not a good idea. None of those apps are ever going to tell you it's a bad idea to buy that stock, because they're just going to get their commissions on the transaction. But having more of a conversation that is bi-directional with the consumer is something I see that's really missing in this process. How do you see your members really embracing part of that back and forth bi-directional need that's required?
No, I agree with you, and I think what ends up happening is, to your point, like the Robinhoods of the world, when you're in a situation like, post, 08, and then, there was obviously some directional in a bull run. But then, like, when you have issues like 2020 and then last year, where there's these fluctuations, and people don't understand that there's the possibility that your account's going to go down 25, 30%, and then understanding that dynamic as it goes forward. The other big deal too, I think, is as you get closer to your 50s and 60s, all the different components of life that hit you then, you got to understand income, you got to understand the other side, the expenses and stuff, versus just accumulating wealth. So I think to that point, this can be very, very helpful. And one of the things I'd ask you too, because I think this is kind of a great way to kind of conclude our comments, is that what I really appreciate about your background is that you started out as a consultant right in the floor, like understanding all these industries, and then you moved to PNC, and then you came over on this side. So all that learning from that, it's got to be helpful to how you're approaching your long and short-term planning and how you see helping our membership.
That's when you were talking about that, I was putting myself in my shoes 25 years ago. I didn't care about the products that we were talking about today. It was not part of my journey. And as I got older, I started to look at a very key part, is that the largest transfer of generational wealth is happening right now. Is baby boomers, and that those levels are transferring their wealth to their millennial children. There's a massive transfer of wealth. And I was starting to think about it. It's like, I didn't care about annuities, or, I had a term life policy because that's what I got as part of, pay $100 and you get $1 million in coverage when you're 21 years old, whatever. But as I started to look at it myself, and I realized that these are real world items. These are things that you and I care about, that these millennials are starting to come up, not a millennial, sorry, is they're starting to care about these types of things. And for the first time ever, we're in a really fantastic situation with interest rates as what they are, is my financial advisor for the first time in a long time is recommending annuities. Because of where it's at. And so as I see these millennials starting to come in my experience with other consulting in other industries, we're starting to see them demand what they get from Netflix or Amazon or all these other apps, of this instant gratification. And it's going to be all generations here soon. Even my dad wants instant via his phone. And so as I look at this industry, technology will drive our ability to service these new and upcoming generations. That is very powerful for the future vitality of this industry. And with interest rates as they are, I think this industry is going to remain really strong for a good long time.
No, I appreciate that, and I think to your point, I think the turnaround in interest rates really is kind of fascinating. I was just speaking with somebody yesterday about this, is that, basically the last time this happened was the 80s, and you had, then it was, the greatest generation kind of going through the process, but they had pensions. We don't have it. Very, very few folks have pensions, and so kind of fascinating, all the different things and components, and you guys are just positioned really well. So Laird, I really appreciate and thank you for your membership and value your company and what you bring to the business and industry. And more importantly, one of the things that, I try to be almost, evangelical in ways, try to understand the retirement process, the income process, and to our membership, because I think that education is so important. So I'd like to thank you for your continued work with NAFA, and we appreciate the support of your mission. So thanks so much.
I appreciate it. And it was a pleasure speaking with you today. It's always great to talk about this. I am one of those, I believe in our industry. I believe in what we do. It's a mission. It's a passion for me of enabling our members, our associates, our partners to be part of this broad industry is an exciting mission that we have at Hexure. Is that it doesn't end with us selling a system. It doesn't end with your members selling an annuity. It ends with the ultimate end of this is that the consumer is able to enjoy financial security by our industry and our mission together. So I am very happy to be a part of it with you and your team, and look forward to a long further relationship.
Thanks so much, Laird. And also, please feel free to reach out to Laird and his team with any questions you may have, because it's just a great organization, and it's really moving our industry forward. So I really appreciate it. Thank you for joining us.
Thank you.